Okay, hello everyone. Pleasant day. And hey, hello again, Mike.
Hi, Dr. Peter.
First of all, before we begin, I want to wish every fathers in the world happy Father's Day. That goes for you too, Mike. Okay, all right, let's jump straight into our topic today. We're gonna make it concise and straight to the point. Okay, so our first topic for today is gonna be on growth stocks. Okay, so we're gonna let Mike explain to us what is growth stocks.
Okay, growth stock basically is a stock that have a high rate of growth in terms of revenue. All right. Okay, so this kind of stock basically uh, have a very high expectations. Okay, for the investor. Okay, so basically what you can see people buy growth stock is because they buy into the futures, not now. So that is the very big difference if compared to a blue chip stock. Okay, blue chip stock is the stock is already profitable. All right. Okay, for example, let's say you look at a stock like in the Dow Jones 30. Okay, those are the blue chip stocks. Okay, so growth stock basically they are not profitable yet, but their revenue can be very high. For example, like 100 millions, 200 millions, even billions of dollars. Okay. However, because of due to the expansions, okay, so they will actually use every single cent that they make from the revenue, spend back to the business. Okay, this is what actually normally apply into the these Americans capitalists. Okay, so the sector in high growth stock normally involved is the internet sector. Okay, now it's a electric vehicle. Okay, clean energy. Okay, and also like 5G, okay, AI, all these basically promise a very good futures. Okay, however, this kind of stock, like if you want to trade into this kind of stock, you have to be prepared, okay. So you cannot say, I mean, don't do the study about the prospect of the products or services and the market, okay, and you just jump into it, okay, and believe it, okay, this company will grow. Yeah, this is basically refer to the high growth stocks. Okay, so it's totally different, okay, compared to blue chip stocks, okay, or undervalued stock, or a value stock, which actually we have discussed. Okay, so the risk of the high growth stock here is basically if it cannot meet the target, the revenue, or something happen in the product or services, or for example, like maybe government interventions, okay, or they cannot get the patent, they cannot deliver, okay, the product and services that they promise, you can see this stock can slump easily 30 to 50% or even more. Okay, so another industry actually high growth stock is biotechnology, but I am not consider biotechnology is a high growth stock because most of the biotechnology company they are still under in the R&D, okay, research and development, and basically most of them they are go through the stage of applying the approval from the FDA. So in FDA, you know that they actually have 4 stages. Okay, so basically each stages, if they go through, you can see something will happen to the stock price. Normally the stock price will spike if it's a good news. Okay, however, if you really study at the FDA process, it take very very long. Except the COVID case is exceptional. Okay, it's only take about 1 years. But if some medicine, I mean doctor, as a medical practitioners, I believe that you know that. Okay, so basically, if let's say they want to produce some drugs or what, it's not the clinical trial. All this actually sometimes take years. Unless you really know and you have this kind of holding power and patience on this kind of company, okay, you can buy into this type of biotech company. But I won't consider this stock as a high growth stock, okay. But if you look at another sector, we call it the medicals, what do you call it, uh, internet, what do you call it? Internet medicines, right? Something like that. Okay, meaning that actually currently, what is the term? Sorry, you will, where actually a doctor no need to go to the hospital. They actually can do the jobs. You know, I mean, from the internet or from the very high tech software, they actually can operate the patient. You call it what in the medical sector? E-medicine, something like that, right?
That phase is still under study. It's not widely accepted worldwide yet because when it comes to doctor-patient relation, what is preferred from the medical board is a personal touch from the doctor. So if you talk in terms of e-medicine, telehealth, telemedicine and all that, that is more of a supporting kind of feature for patient and doctor services. It's not a mainframe yet. But anyway, before we dwell into all that, in terms of defining a growth stock, that stock would be like how many years of age, and also what is the percentage to actually consider it to be a growth stock?
Can you ask that again? Can you ask the question again?
In terms of a growth stock, what would be the number of years? Would it be like from 6 months from listing, 1 year from listing, up to how many years? And also, what would be the percentage of increase of appreciation to it for it to be considered to be a growth stock?
Oh, okay. So basically, if a company, okay, just a startup, okay, we not consider as a growth stock, okay, because this company in a startup stage, normally in the early stage, normally it take about 1 to 2 years. All right, okay. So minimum 3 years for them to at least grow up the revenue. Okay. So the second thing here is how many years, okay, we can consider to pick the stock is very, very subjective, to be very frank, okay, because you have to look at the industry the company involved in, okay, and who is behind it, okay. I give you an example here, okay. If you look at the electric vehicle stocks, okay, some company basically take about 5 years more to come out the products, okay, just a prototype product, okay. So basically if you look at Tesla for example here, Tesla is still considered a growth stock, okay. So Tesla actually started in 2008, okay, by Elon Musk, okay. So when it started, actually people all laugh at him, okay, because the first Tesla don't even can run more than 25 miles, okay, which actually around 30 to 40 kilometers, okay. So basically after that, he never give up, okay. So I think you are not mistaken, the Tesla actually is listed around 2010 like that, okay, or 2012, something like that, okay. So basically you can check it back, okay. So during the period of time, basically Tesla is actually less than $1, okay, because of the product actually is not recognized yet, okay, and they don't have any sales, okay, until I think 2012 they launched their first product, okay. By that time they already listed already, okay. So during that period of time, if you really understand the growth of an electric vehicle and you're willing to stick with Elon Musk vision, okay, you actually can start to buy into the stock, okay. During the time, actually, if you really buy in that stock, the stock actually cost less than $5, okay, cost less than $5, and basically it take about 8 years to become profitable, and the revenue also actually growth is not really a stable revenue growth. Basically, sometimes it grow fast, sometimes some quarter it grow very, very slow, and some product they're facing a lot of hurdle, okay. However, up to I think 2020, okay, about a year ago, okay, 1 or 2 years ago, okay, Tesla actually suddenly boomed the prices because of their products, the sales, okay, reached billions of dollars, okay, and basically they start to make profit, okay. So if you look at Tesla chart, okay, you have to be extremely very patient. Okay, if you buy in Tesla in 2010, you have to wait at least almost 10 years to see the stock reach the potential, which actually give you, we have studied that, okay, Tesla, if you invested 1,000 10 years ago, okay, it will be worth about 200 over thousand now, okay, 250,000 now, okay, but that spike is only come at the year of 2019, 2020, meaning like the first 9 or 8 years, it actually, maybe you just make a bid, you know, and you sells it, okay, or you buy back, that kind of thing, okay. So it actually, you have to be very patient, come to a growth stock, okay. So the trend can be different for different company, okay. So another company, I would like to take example, okay, as a growth stock here is, okay, we recently there are a lot of spec in listed spec in US. Spec is stand for special purpose acquisitions corporations, okay. So those who don't know, actually spec is when you set a lot of investor or reputable investor, which they have hundreds of millions of dollars, okay, they set up a fund, a shell company, okay. So basically they are looking for those visionary company. Some already have products, okay, already have services, okay, and basically what they do here is they will merge with them and take the easy path for go for listing. And spec listing actually is very common in year 2020 and 2021, okay. So in Malaysia context, we can look at it, actually is Grab, okay. Southeast Asia, Grab is going to be listed in the third quarter or the last quarter of this year by merging with a spec, okay. So basically Grab will consider actually as a growth company after it merged, okay. So it depends whether you have a confidence on Grab can grow, become profitable and continue grow, okay, and you can actually buy in. So you must know the business very well, okay. So this is two example I give, Tesla and Grab. I think basically a lot of people know these two business, okay, because Tesla is already well known. Grab, I believe, as Malaysians, Singaporeans, or you stay in Southeast Asia, you will use a Grab service, okay. So basically both company are still considered as a very high growth stock, because we foresee a lot of so-called prospect, okay. Like for example, Grab is going to venture into the fintech, okay, and Tesla is going to venture into what do you call that, autonomous taxi, okay. So all this actually is depend on how is your projections for the futures of the growth stock company. All right.
Having said so, growth company sounds more like a young company, and it's I wouldn't use the word infancy, but it sounds like a young company. So are growth stocks necessarily penny stocks or otherwise, or can it be both? Can it be both penny and also non-penny stocks? Would you comment on that?
Oh, I think penny stock and growth stock are totally a different category. Okay, penny stock is a stock that don't have I would call it don't have any value proposition. Okay, meaning that they are still in a very high risk area. Okay, they are selling the price below $5, because in $5, if you sell below $5 in US, it's considered as a penny stock. Like I told you, the spec merger, okay, normally the merger price base actually is $10 already. They cannot consider as penny stock already, because the billions of dollars actually is inject into the merger acquisition, okay, and to listed, okay. So they are not considered as penny stock. Well, penny stock is some company which actually they need some capital, like maybe few millions US dollars. Okay, so basically they're listed in the OTC counter. Okay, and then slowly they grow. Okay, and then become still very small size. You know, the revenue maybe is just about, you're talking about maybe less than 10 million, 20 million, like that. Okay, but they are listed. Okay, but this stock is extremely risky. If you are saying penny stock and growth stock, definitely I would choose growth stock. Okay, penny stock normally, okay, yeah, biotech company, there's a lot of penny stock because they don't have any product yet. They don't have any revenue. Okay, because they are still under R&D. Okay, so it's very high risk. But however, if let's say they get FDA approval, second stage, third stage, you can see actually the share price will boom, shoot up. Okay, if that industry is very promising. For example, if somebody discovers some drug can cure any type of cancer, you know, by just consuming it for 1 or 2 months time. Okay, so if they get a second stage of approval of FDA, you can see even the stock don't have any revenue, the stock maybe can skyrocket to 100, 200 US dollars. You know, so but the risk is definitely very high. Okay, so it's not necessary, okay, penny stock is a growth stock. Please separate these two. Penny stock considered is a very high risk stock because they don't have any revenue, they don't have any promising investor back up them. Okay, but growth stock is different. Growth stock actually they have a huge investor back up them. Okay, they have a high revenue. Okay, it's just that they are not profitable yet. You know, so this is actually a growth stock. All right.
All right. So in this context, I mean, in terms of reference to growth stocks, um, when does a growth stock actually become labeled as a blue chip? I mean, like how many years and what is the appreciation? Is there any certain percentage of a dividend? How do we actually categorize, or how do we actually value a growth stocks that has already become or matured into a blue chip? For example, say like from the likes of Apple, Google, and even like probably Starbucks. When is that point whereby it actually emerges from a growth stock into a blue chip?
Okay, so basically, when the company start to be earning money in a very steady mode already, their product is already accepted, okay, by the market, okay, and they still continue, they still can continually grow, but the growth rate may be slowed down already. Okay, in the early stage, the growth rate may be like the electric vehicles, okay, company, the growth rate can be like 100%, 200, 300% per annum. Okay, however, because this growth is very high, okay, and a lot of people come into this industry. Okay, so the survivor will only have few only. That is it's very normal in any industry. In the early days of internet, okay, we have Yahoo, we have all type of business, pets.com, you name it, Alta Vista. Okay, if you guys are old enough, you know the name that I mentioned. And suddenly we have a Google coming in. Okay, so you have Amazon coming in. So there are hundreds of thousands of them. However, out of hundreds of thousands, only few can become giants. Okay, so that's when these few become giants already. Basically, they will the profit, because the market is already saturated. Okay, so the profit growth is very slow, but is stable and consistent already. It's unlike when you're in a growth stock. Growth stock basically is the revenue growth, where they are not talking about profit one. Okay, you're talking about the revenue growth can be from 100 to 200% per annum. Okay, but you're talking about like blue chips, it actually maybe like about 20, 10, 20, 30%. It's a major, you can measure the market size already, you know. Well, because the market is already saturated, Unlike growth stock is the market is still not saturated. It's just like EV. Like electric vehicle currently actually is less than 10%. I think less than 5% of the total car in the market, okay, is EV. So the market is still very, very huge. You know, that's why company like Tesla, like NIO, okay, like Zipeng, all these Chinese company, and even those traditional car manufacturers that go into the EV industry, they actually get a boost from the share price. Okay, so basically the market is still very, very big for them to explore. Okay, so who will be the winner in the end? Okay, so basically in EV industry, clearly Tesla actually is a pioneer. Okay, but of course others will catch up. We don't know. Okay, so but like I say, EV is not as easy like internet business, because to produce a very high-end autonomous electric vehicle is not easy. Okay, so I foresee that EV car like Tesla, like NIO, those people with a big backup. Okay, there are billions and billions of dollars to burn for the R&D. Okay, these other will become the winner one day. Okay, so when we become winner already, you can see that maybe the market is already saturated, maybe 50 to 60% already. You know, so the growth is start to slow down. Okay, so once they start to slow down, that it will become a blue chip company. It's just like a mobile phone in the early day. You know, the smartphone. Okay, so back to 10, 15 years ago, when Apple iPhone just launched, okay, Apple from actually technically it's a very sick company already, to be very frank. Okay, but after Steve Jobs come out the iPhone, okay, the sales suddenly boost up. Okay, and you can see during the last 10 years, Apple stock has been grow up like crazy. Okay, so it take about 10 years time, okay, for them to conquer the market share. Okay, the moment they conquer the market share, you can see the whole market is slowed down already. And when this market slow down already, people are not excited anymore. Okay, so you can see the PE start to drop. It can drop from maybe 150 to 20. Okay, so this is all depend on market, but typically it take about at least 5 to 10 years minimum. I call it, sometimes more than 10 years before it reach that stage. So for you to ride with this growth stock, if you believe this company will survive it long, it is a very good timing. But if you are wrong, you may not get the kind of return that you desire. There's a risk of when you are investing in a growth stock.
All right, having mentioned it this way, sounds to me like we should avoid penny stocks altogether, or maybe you can comment on that. And also, with regards to growth stocks and blue chips, is it better to focus into growth stocks? I mean, if you want, if any of our investor friends and audience who are watching this, if they were to want to maximize their portfolio, should they focus and zoom in on growth stocks alone, or should they play safe with blue chips, get dividends and earn from the appreciations and the splits? Or is it better to actually diversify into both of these or all three categories? What would you advise?
Actually, when you come to the investment, okay, it's all depend on your objective. Okay, and also I would call it your bullets. Okay, guys. Okay, whether what is actually your allocations from this portfolio. So if you are guys who are actually looking at very stable, you just want to have maybe the return of like double digit is good enough already every year. Okay, so basically you can look into a blue chip company, because this company are tend to be not so volatile. Okay, so the drawdown maybe is not more than 30%, and when it draw down, you buy it, it's normally this stock will go up again. Okay, so if you are in the category of it's depending on your age also. Okay, and also I think the most important is depend on your capital that you have in hand and the risk you're willing to take. Okay, so basically I personally I have about 8 portfolio, so every portfolio actually target different sector. okay, some of our investment, okay, which actually let's say for investment normally I will buy in a blue chip, okay, and some actually are mixed, okay, which actually investment plus the growth stock, okay. So you actually can do this, okay. Actually provide you the higher return if you are right, okay. So you actually can put it like 60% into a growth stock, 40% into a blue chip, or half. It's all depend on your preference, your capital in hand, your expectation, whether you can take it to see the growth stock, okay, swing up or down or not. I personally prefer, if you want to invest in growth stock, you actually can using a strategy. I call it half. What do you mean by half? If half you use for trading, half you are holding for a long term. You know what I mean? Okay, so basically this is like, because when growth stock fluctuate, it actually can fluctuate like 50 to 60%, you know. If you everything you put into the growth stock, if your timing is not right, okay, you can you stand your portfolio go down 50 to 60% or not? If you cannot stand, well, it's very tough for you to you know, go into this kind of a whole growth stock portfolio, okay. So if you are the guy who can stand it, you know this is very normal, I still trust this company, so go down to 50%, I buy more, okay. So the moment you buy in, okay, the stock go up, you sell that part, okay. So that is actually, I would call it a trading profit, a swing trading profit, okay. So another 50% you are basically just hold on, okay. So I'm actually using this kind of strategy in one of my portfolio, which I think is work very well, okay. Where actually when the stock go down 50%, I buy, 60% I buy, okay. So basically, of course, this combined with options also, okay. But if you don't have option, just using a stock, just purely you can using this 50/50 concept, and it works very well in terms of psychology, because not many people can see the portfolio go down 50 to 60%, especially for growth stock. Just for growth stock, normally if let's say they see the thing go down 30 to 40%, they may start to worry and they cut loss already. And another 2-3 months, they can see the stock you turn back and go up, skyrocket. This is common mistake made by a lot of new trader or new investor, okay. So investor, when you go to trading or you go to invest, have to make sure that the money that you put in here is not that money that you use. If there's the money that you use, okay, it's very common you will make this kind of mistake, and you will definitely like going to make a losses, especially this kind of environment, okay, where actually the tapering start happening in the market, okay. As you can see, last Friday actually the Dow Jones has been gone down to 500 points, okay. So in fact, during this period of time, growth stock is not really impacted. But if you're in blue chip, your blue chip will be impacted, maybe like go down like 5 to 10%. But your growth stock is not really impacted, so it balances it out. So overall, your portfolio is still very healthy. But if you all put into the growth stock, the moment the growth stock start to slump 50%, 60%, your whole body will be very weak already. You know what I mean or not? Okay. So use it for trading and use it for for investing. Okay. So if you can use it both together, okay, it will be create a more balance, and from time to time you can see after 1 or 2 years time, you can see your portfolio can grow. I would say if you choose the right one, you can grow easily 30 to 40% every year.
Sounds to me like majority of the portfolio holdings would be safer with blue chips, and then sounds to me like we only go into growth stocks if we really know about that company specifically, about their ins, their outs, the nature of the business, what is the profit, what's the liability, what is the assets, more into the details. Because I mean, like, I believe that in the case of Apple, I believe Apple have gone through all three phases. I mean, Apple started as a penny stocks, Apple became a growth stocks, and eventually today, I mean, Apple is like the biggest company in the world, coming neck and neck with Amazon, $2 trillion companies. So yeah, I mean, that's an interesting discussion indeed. So in this context, Mike, how would you speak in terms of the strategy for these categories of stock?
Yeah, okay. As I mentioned, okay, for growth stock, actually, basically, you can use it for tradings. If let's say you have 1,000 US dollars every month, okay, you basically, if you really want to focus on growth stock alone only, okay, because your risk appetite is high, your return is high, and you believe in that company. So you have you have 1,000 every month to invest in this, okay. What you can do here is you can buy every month using dollar cost averaging, okay. And another one, you can use it for trading. Okay, for the trading strategy, okay, well, basically, I would say, okay, if you believe in that company, okay, when the stock start to rise, okay, you actually can start to buy it, okay. And when it start to retract, okay, wait for until you are really, really comfortable, the stock have a U-turn back, okay, then only you, okay, start to going in, okay. So because in the trading part, in a short-term part, like maybe like 2 weeks to 2 months or 3 months, you are looking for the profit, short-term profit. So don't try to go in, let's say the stock is only retract by 5% from the all-time high. I make this mistake. Even like retreat from 10%, I going in, the stock, I give you an example, is like NEO. NEO, actually, I'm using it for tradings and investing. Okay, so basically, I bought it actually at around 24. It all the way go up to $62. Sound very good, right? More than 100% return. Okay. However, when NEO go down like $50, okay, which actually is more than 10%, I start to buy. So the timing is not right. Okay. So basically, why? NEO stock go down to 40 again, I buy again. And it drops some more again to 31 before it go back to the current stage, which is actually around 47. Okay, so you can see how volatile this stock is. Okay, so normally if you want to do a trading, okay, you are basically have to really comfortable, know which stage you are going in, and you must have that kind of holding power if you are wrong, or you can do a cut loss, which actually I'm not encouraged, okay, because of if you cut loss, if any good news happen to the stock, you will go up and you will start to lose already. Okay, so when you start to trade, okay, basically if you are wrong, you have a holding power, is okay, you still can wait. Okay, so because in the end of the days, you know this stock will turn around. When this stock turn around, it will turn around quite fast actually. My personal experience, I can see it, especially the growth stock like NEO EV company. Okay, so this kind of stock, basically when you can see the sales is growing, okay, the next quarter, you can see the stock start turn around at $30 to $40 just within a week only. Okay, so this is actually things that you must aware. Okay, so when you want to find a growth stock also, the strategy is like you must choose the pioneer of that industry. Don't choose something that very small, like nobody know one, that company. Because nowadays you look at NEO, actually is the largest EV company in China. Of course, I think the sales, they are going to overtake Tesla very soon already in China. Okay, so China basically have the government target is to make the whole country vehicle 20 to 30% by 2030. Okay, we're using EV. and currently they have more than less than 5% only. So you just imagine that kind of growth. You know what I mean? Okay, so if you have that kind of holding power and you have that kind of psychology to handle the downtrend, you can actually easily trade growth stock, and you can do very well. I would say in 2 to 3 years time, you can see your return can be 100%. In fact, actually, I have one portfolio is a growth stock plus the blue chip counter is already more than 100%. Actually, it's only about less than a year time. Okay, but again, timing is very important when you come to trading. If you go into a wrong timing, you must have a holding power. This is assume that every month you have money to trade. Okay, because a lot of people when they go into the trading, the growth stock, they treat it more like a casino and get rich fast one. They not really do the study of that company. They don't know how to do the technical analysis. Okay, and if they are wrong, they go and cut loss, which I think is not really a good idea. Okay, so basically it's very important for you to have a ready capital every month for you to really want to ride with the growth stock, or if not every 2 months. So if you are wrong, you still can hold. Your holding is just about 2 months time, then you have a new capital again. So if during that time, if the stock recover back, so basically if you think it's not a good timing, you can hold it for another 2 months again, 1 month again. It's all up to you have the kind of bullet to play with it or not. Okay, but if you thinking I take 10,000 US dollar, just want to become 20,000, 30,000, 50,000, you may get that. But if you continue this kind of game, if you miss one trade, or it actually you just target one stock or two stock, if you miss it, okay, that's it. You know what I mean? Okay, so I personally think that the best thing is every month you have money to invest in the growth stock is the best. Okay, it's not like, because a lot of people they invest, they trade or they invest in the stock, is they see the stock go up $1, they cabut. I mean, they get out lah. Okay, so basically you can't get rich. I mean, you can get rich in a long-term basis if, let's say, you invest using this kind of method. Trust me, okay, you won't get rich one. Okay, however, if you want to invest for income, okay, maybe can, but are you every month so lucky? You get me or not? Okay, for example, you think that, okay, you have 10,000 US dollar, you think this month I want to get a 20% return from trading, so first month maybe you can get 30 to 40%, or you're very happy, you get 3,000, 4,000, and you take out your money. It's the second month give you the same luck. You know what I mean? Or third month you have this kind of same luck. So the moment you lost back your 3,000-4,000 that you make, you try to make it back again using very irrational methods, you will lose again. Okay, so investing or trading, okay, trading, I would say, if you want to trade well, you have to have a big capital to start. You can have a very small capital if you are really good and you are really lucky every month for income. But if you don't have, okay, I would say trading is for big capital, minimum for 10,000 to 20,000 US dollars for you to get 5 to 10%. That also you must have experience to go through. But investing is very easy. You know that every month you have 1,000, you just take this 1,000, you just keep buying whether the stock is going up or going down. In a short-term period, you don't care. But your target is 1 year, 2 years, 3 years, 4 years. We are not talking about monthly return. Because you have the bullet and you believe in that company. That is investing. Actually is I would call it simple, but it's not easy. Trading, okay, I would call it, okay, is actually you must have a discipline, but you must have enough bullet power, a certain strategy that is proven. If you are good in scalping, you can actually do scalping. In fact, actually, currently every day, actually, I do scalping. I make a lot of money, to be very frank. Because your mindset set on scalping. Okay, you have a target. When you reach there, you get out. Okay, it go down, you cut. You just like, there's a study saying that a good gamer, or people who play games, okay, they actually can become a very, very good scalper. Why? Because they play game is just like reach out, okay, don't reach out also, you know what I mean? Okay, they have actually a standard procedure for them to follow already. You know what I mean or not? Okay, so basically, I do study some good scalper. Actually, they actually are the background are gamer. They play games a lot. So today, to them, okay, when they're trading scalping, okay, they actually feel like they are playing game. They didn't notice that one day they spend they spend about 5 to 6 hours times, okay, just to in out in out in out. In the end, they lump it up. Oh, today they're making about 1,000, 2,000. Yeah. And because when they play the game, they don't look at the scoreboard. They concentrate on the game. This is more important if you want to become a so-called professional scalper or a day trade. A lot of people say day trading is very, very hard to make money. No, not really. Okay, but it's tiring. It's tiring. Okay, that's why actually, to me, day trading, I practice it every day. However, actually, I combine with options, so I have more multiple choice. Okay, not necessarily only on stock only. I can using the options to hedge it and to actually I have more choice, I would call it. Okay, so I can actually option making money, I can get out. In stock market making money, I can get out. If it's losing, okay, either I let the option expire or I can cut it. So you must have this kind of discipline when you want to come to trade a growth stock. Growth stock actually is very, very good to trade. I mean, in options 101 in MTRADEGO, when we tell people how to long and long call and long put, okay, if you really know the market, especially the specific stock very well, you basically can predict the day high and day low. Because the moment the day high, what you do? Long put. The moment you day low, what you do? Long call. And because growth stock is the momentum is very high, okay, the volatility is very high. So normally when reach day low, you long call, you get out at 20-30%. And it works. I prove it with 10 trade, I can win 9 trade. But again, it's very, very tiring. Okay, so you can using growth stock for trading. Because investing, you need to see, if you really want to see the growth, okay, you need time. Because the company cannot like one day give you, every day give you the sales that you want, and people look at the sales actually in a quarterly basis also. All right.
All right. Wow, that's a very good insight into things. So, what I'm gathering here is in the context of when we look for maximum profit, that would be in the growth stock category. That would be like on either one or two companies that we understand very well the nature of business, their profit, losses, assets, liabilities, and all that. That will be on the growth stock side. And also, I think it's also pretty good and advisable to actually hedge our positions with blue chips that has constant returns with gradual appreciation and also a good payout of yearly dividends. That would be my take on it.
Good. You know, yeah, because as I say, you know, because if your guys, I mean, most of I think the audience are still not a full-time trader and investor like me. Okay, so basically, you maybe can start with just investing in like what Peter said, just investing in a growth stock. Maybe your growth stock you put into like 20 to 30%, okay, or 60 to 70%, okay. You put into the blue chips, okay, because blue chips again the fluctuation is not that strong, okay, so you actually can do your work very very well because nobody want to see the portfolio suddenly go down 50 60%. You know what I mean or not? Okay, so if they go down like 10 20 30%, they still can accept it, or even 40 50%, okay, unless you really are almost a full-time, you know, or full-time like me already, okay, then it's okay, you can have multiple portfolio because every day one portfolio will give you income regardless what, you know, but that is actually for income, but for your growth, to generate the wealth, to accumulate your wealth, I would say is a long-term basis. Okay, it's a long-term basis. Okay, okay, because I mean I'm a full-time entrepreneur, I'm full-time traders, okay, so even I would say that, okay, I even a full-time also nowadays I don't spend more than 3 hours, okay, on the market, okay, so basically this is how it all depend on your current situations, okay, but like Peter said, he actually prefer, you know, a mixture of growth stock and blue chips. Yeah, I agree. Again, when you mix it, you have to look at the proportional. Whether you want to put it 50-50 or you want to put it to 20-80, 30-70, all up to your choice. Simple as that. If every month you have 1,000 US dollar to invest or even 500 US dollar to invest, okay? Because stock market is not a place for you to get rich fast, you know. If you have this kind of concept, stock market is the place for you to get rich fast one. Uh, if you're lucky, you ride the right trend, right? You may turn into a millionaire, okay? Yeah, it happened. It happened like Bursa Malaysia just like 2 years ago. People who buy some glove stock, okay, it go up 20 to 30 times, okay, within a few month times, you know, okay, okay, but after that, if let's say you come out already, okay, some people I know that they do that, which actually I think is they are pretty really good luck. I mean they have a very they are very very lucky, okay. But if you want to treat stock market is a cash machine, at the same time provide you a long term growth one, okay, you must have all type of, you must have an experience and willing put your times, start to put your time like maybe every day, start with 30 minutes to 1 hour, and as time go by, if you start making more money, you can put maybe 2 3 hours. I not encourage you to stay at the screen more than 3 hours. This is my personal experience, okay. Okay, unless you are really like the scammer type, like the super scalper, you know, I'm not considered, I'm the type of person, okay. So basically if you are not that type of person, okay, basically maximum, it all depend, because you are trading US market. So you are trading US market, you are from 9:30 to 12:30 is good enough already, because normally if you are trading 9:30 to 10:30 is a good time for you to go in or take profit. 12:30, if anything happen, okay, if you have more than 25,000 US dollar in your account, you can become a day trader. You won't fall into a, they call it a day trader pattern. Okay, you can minute you can go in and out. Okay, so if not, you cannot trade more than 3 times in 4 days. So in MTRADEGO also we will guide you how to not fall into this day trading pattern if you have less than 25,000. But to become a day trader, minimum I would say you need at least 10,000 to start with. Unless you are very happy to make about 20, 50 US dollar every day, then maybe you can start with 5,000, possible. All right. Okay. You can do that if you want. Okay. So some people are they are stuck with like 2,000. They can build up the account to 20,000 to 25,000 and grow it. Yeah. They are this kind of trader, but it takes years. Okay. But it's one out of the millions. Okay. One out of the millions trader, or even one out of the 100 million traders. I'm not in that category. Okay, my skill is, okay, I'm not in that category. Okay, my skill is I trade swing stock, okay, and I make money, I get out half, and then from there I start to accumulate, and I trade incomes. I build income from trading options. Okay, so this is actually it's all depend on how, okay, how good you are, or how committed you are, and don't give up like in trading. Okay, because a lot of people will give up in trading one. Okay, because especially when you have a big drawdown. Always remember trading, if you don't have drawdown one, you have to be very, very careful already, because it build up your confidence, and when your confidence grows super high, you will take more risk, and when that thing happen, you maybe can wipe up your account. This is my personal experience in the early day of trading. Okay, which actually I have at, I think 9 to 10 months, never have any drawdown period. Never a single month I have a drawdown. You know, every month I'm making about 15 to 20% like that. Okay, so I would prefer that you have different type of trading strategy. So one type will sure guarantee you every month have certain type of income, like scalping. Okay, swing trading, maybe some months you're up, some months you are down. Long-term trading, for you to accumulate your wealth. This is how, you know, if you can structure yourself, become a 3 identity: scalper, swing, and investment, and 3 different portfolio. Don't mix it, because if you mix it, the portfolio will mix up. I just let you know, this is based on my personal experience. It's not easy, you know. Okay, because scalper and swing trading, you have to have 2 different of category mindset to trade it. So sometimes when you trade scalping, you will think of swing trading. No, it doesn't work. You cannot use a swing trading methods put into the scalping. And when you trade swing trading, same thing also. You cannot use that method into a scalping. You have to let it be. 2 weeks is 2 weeks. 3 weeks is 3 weeks. You cannot say every day. Okay, you make a bit. Swing side also you cabut. Then it doesn't work anymore, because swing trading will have a bigger drawdown, but they will give you a bigger return. Scalping, you have a small drawdown, but it gives you a smaller return also. And for investing one, just put there and let it grow. All right.
Okay, that basically sounds
Okay,
like
so
good news to me. I mean, um, what I can draw from this is, you do not have to be a top trader, you don't have to be the best of the best, as long as you have a clear objective, you have a clear goal, what is your targeted return, and what is your selected company, your selected stock of choice. The financial market is a place for you to actually make good returns and good profits.
I totally agree. Okay, I mean, before we end this session, actually I have some quotes from one of the legendary trader. Because today we are talking about more on trading, because we are talking about growth stock. Okay, because growth stock, for you to buy and hold is okay. It's easy. Go buy and hold things. Okay, I don't want to discuss. Okay, because it's too easy. Okay, and definitely can make you money, but in long term. Okay, but talking about trading. Okay, trading is not that easy. Okay, so this guy is called JC Livermore. He's a legend of trading during the market in 1920s, 30s time. Okay, he make, I think, 100 million. During the time you have 100 millions, you are really, really rich already. Okay, However, this guy have a very bad ending lah. Okay, but we don't want to talk about. We don't want to look at the bad ending side lah. Okay, okay. If you read about this guy, we look at how he can become a soccer or very successful trader. I actually share this quotes in our group when for those who actually haven't joined MTRADEGO. Okay, the moment you sign up MTRADEGO, you find it with $100 US, you can get all this kind of info in our WhatsApp group. Okay. And also in the we'll update you about all this. Okay, so there his quotes is very, very interesting. Okay, he's saying that buying a rising stock and selling a falling stocks. Okay, so we are not talking about short selling. This I'm actually against short selling 100% here. If you really want to trade a stock, if you really foresee it go down, okay, you have to learn option, put option, because short sellings, I'm not really I actually against it 100%. Unless you have two accounts to hedge it. You are a professional trader, that's different. Meaning that you're one short, one long is okay. But if you only fully try to short the market, don't. Because now today we have these warriors, okay? So you think that the big boys can win the small boys? I mean the small fish like those these what do you call it, right? These traders, or it's no, because these people, they have a volume, huge volume. So don't play with short trading. Okay, so he says selling the falling stock here. Okay, selling here may mean that for him meaning that actually maybe it's a cut loss. Okay, and then he said do not trade every days of every year. Okay, so basically that maybe this is really referred to as swing trading. Okay, yeah, swing trading, you don't need to trade every day unless you are a scalper. Okay, for scalper, yes. Okay, yeah, so only enter a trade after the actions of the market confirm your opinion. Okay, yes. Okay, this one is I would think is correct also. Mean that you have an opinion on that stock. Okay, but the moment you look at the stock price really follow your opinion, you go in, meaning that your opinion, you are win the half better already, because your opinion is partly right already. Okay, but somehow if you go in the time, it go down, what you do, sometimes you need to wait. You know what I mean? Okay, so basically for this quote, I would say yeah, partly right. Okay, continue with trades that show you a profit and trade that then end the trade that show a losses. Yeah, I did that, especially for swing trading. Okay, also maybe for day trading also. Okay, so if I make a mistake, I normally sometimes I wait for 1 or 2 weeks time. Sometimes my position is too big, I also cut it. Sometimes you cannot so-called use your hand, take the falling knife. Okay, because growth stock, when it grows, it drop down is not 10-20% one. 30 to 40% when it drop, you are smiling already. Can drop 50-60%. All right, so sometimes you just cut it. Okay, so that's where profit one, let it ride until the top, and when the thing start to slow down and go down already, you think you achieve your objective already, you can stop also for a while on that stock. And what he say here is, okay, this quote, I like it a lot. End trades when it is clear that the trend you are profiting from is over. This is more like trading. And so when it is over already, get out. The reason one trade that I trade absolutely really fantastic one is a gold. So this is not stock. Okay, this is a gold. Okay, so basically I trade it I trade this stock for about 4 months time. At the beginning I lost, okay, but however I believe gold will bounce back, and I follow the trend all the way until at the top. When it start to consolidating, I get up. So this part I'm totally will be agree. Okay, and I say in any sector, trade the leading stock. This one I mentioned already. Okay, if you want to find an EV stock, don't find just the startup who actually give you a higher risk rather than you choose those already proven one. Okay, and never average losses. Okay, and this is totally different. Like in investing, where actually we're using dollar cost averaging. What do you mean by never average your losses? Is meaning that if it lost, cut it. Okay, and market are never wrong. Opinion often are. Okay, this is I totally agree also. Market is always right one. Who are wrong is you yourself. We ourselves as a trader, we have to admit it. We make the mistake. Today I just discover one. I think about 2-3 options that I putting in last week is a totally a big mistake. Okay, what I do here is when market open on Monday, I'll close this position with losses. No choice. Sometimes you have to bite the bullets. You know that you can make back one. Okay, it's very important as a trader. You must always know that you cut the losses. You have the way to make it back, especially in options, as I say, Okay, so this is actually it's actually, and there's a lot of quotes again. Like again, I'm not going to mention it because we don't have enough time. Okay, so what I try to say here is, okay, if your guys want to trade with MTRADEGO, your guys we will share all this strategy way, okay, to guide your guys, okay, when your guys join us. All right.
All right, people. Just want to say thanks for your time and your attention. We appreciate you sitting here, being with us. We appreciate your company and all. And for those of you who would like to get started on your trading and investing journey, we very much welcome you on using our platform MTRADEGO. Okay, the link is given below, so just click on the link to sign up and register for your MTRADEGO account, and basically you can fund your account with a minimum of $100, and this $100 you can use it 100% to buy your stock of choice. All right, so in that context, basically registration sign up is actually free, so that $100 basically is all for you to use to actually purchase your stock of choice. You can enter your most favorite company or select the companies and all that. And also we would have continuous learning series, and also coaching and sharing for the benefit of all our members here. So as always, our goal is that everyone can trade, everyone can make profits from the financial market, namely New York and also Nasdaq. And also Mike will tell you that in the coming future we would also have our markets for our Asian counterparts as well. So in the meantime, for those of you who have a job, who have your own business and all, we would like to encourage you to actually make the financial markets your second income. It could be your third income, it could be your fourth income, because nowadays it is definitely more advisable than ever to actually have multiple sources of income. It can be your second, your third, your fourth, your fifth income. In fact, if you look at it, the richest people in the world, the richest people in Asia, the richest people in Malaysia, anywhere in the world, richest people in the world have more than one business. Simple example, boss of Amazon, Jeff Bezos. Everybody knows him for Amazon, but actually he's got his hands in multiple business. Alibaba, Jack Ma, people know him as the boss of Alibaba, but he's got his hands in multiple business. So the list goes on. So what I'm saying here is don't limit your income to just your day job or to just your traditional brick and mortar business, but diversify it properly into the financial markets. Let the markets make money for you. All right, Mike, any messages before we actually sign off from this session?
Yeah, I think not much. Okay, but as Peter say, okay, Mac investment actually is your extra source of income. Okay, because nowadays I personally running a business. I know that, you know, running a business you have fixed cost. If you don't have enough revenue to running, okay, the worst here is when you're still with a brick and mortar business, which have a huge, okay, cost to bear. All right, okay. So basically, if you're working with people, when you are CEO, CFO, CTO, call it C, labor, whatever it is, okay, the moment you cannot contribute to your company, you are out. If you don't have a financial planning early, okay, I just read a report this weekend actually. There are a lot of Singaporeans actually with the income of 100,000 to 200,000 per annum Sing dollar don't have enough saving if they stop working for 3 months. All right, so don't fall into that category, because in MTRADEGO we will guide you how you can manage your financial, okay, via US stocks. All right, okay, thanks. All right, thanks Peter. All right, and thanks guys.
Thanks,
All
Matt.
right,
And thanks, everyone. We'll
bye.
see you again.
See you, bye. All right, I think that's all lah. All right, okay, yeah, so I
Hey.
did it now lah.
Chiba, this one, that Uncle Zama, he's saying that after he lives in Bursa, he also